Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, Chief Currency Analyst here at HYCM. I hope you're doing very well. We've got a lot to learn in this next session, and I'm really pleased we've had some interesting market events because they're going to form great learning lessons, particularly as we see sentiment shifting mid-session. That's going to be really a key takeaway that we're going to get during this time. So just as folks are coming in, saying hello, hi Chris, Ashik, Yulia, Toby, Van, great to have you on board, guys. Really looking forward to the next session that we have ahead. Just as folks are signing in, just simply to remind you that as I go through a number of different currency pairs, looking at entries, exits, etc., the whole idea of this webinar is to be a workshop and to be educational. So what it isn't a opportunity to receive signals. It's not that I'm going to give you signals to trade. That's not the idea of these workshops. The idea about education. So the big thinking is that you have a look over my shoulder, and when you see how I make decisions, then you can see the reasoning for those decisions, and then you can go away and you can be better informed in your own trading to make your own decisions as well. So that's the way it's going to work. Looking at the outline of the session ahead, the special topic we're looking at, and I hope we get time for this because we didn't properly have time last week, and I'm feeling nervous this week, so there's a lot to learn, but never mind. I'll try and get through the material, and you can always go back and listen to the recording if you need to go over something. And don't forget as well that you can type questions in the question panels as we go along, which is on your go-to webinar control panel. The little panel that says questions. Feel free to ask questions as we go along. Really happy to answer them. Handout for the session. Handout for session is found under the handouts section of the go-to webinar control panel. Just double click the workshop guide, and when you double click that, you'll see that here. And this is the session. This is the special topic we have. And then I've designed this handout to be one page that's simple and practical, but useful. So these titles of looking back, looking forward, looking at the charts, looking at your risk, looking at the outcome of your trade are all very important pillars for FX trading. So the idea is you can print this out and use it as a template. This is what I do automatically now. I just do this. But when you're first learning or first starting out, it can be helpful to have something to print out so that you just get into a habit of doing, habitually good things, good practices. Any suggestions for topics that you'd like, please email me here to giles.coughlin@hycm.com. Very happy to answer questions. And the big picture of what we're doing is we're trying to identify strong and weak currencies for each trading session that we come to. Obviously, the trading day is split up into 3 different sessions: the American, the Asian, and the European. And so what we're trying to do is we're trying to identify strong and weak currencies for each of those sessions. Okay, and I'll show you how there was a trade that I took today and I closed out today, and I'll show you how I did that using this system. Okay, and that'll hopefully be a helpful learning point as well for you guys. So without further ado, let's get cracking. Turn to your handout, and the first thing we do is to look back. Okay, we want to identify recent sentiment. When I say sentiment, I just mean the mood of the market. We're trying to find out what's the mood, what's going on, and that sentiment will give us an indication of early price direction. So here we are, Asian session. I came to my desk just as the Asian session was closing, just as the European session is opening up. And what I saw was the following. I saw the Nikkei, the Hang Seng, the Shanghai, and the S&P 200 were all up overnight. So that tells me Asian equity markets are up. So the first thing that tells me, okay, Hong Kong and China, they're back from their holiday. All the markets are in the green. So that's positive mood towards risk at the start of the European session, early morning Asian session. Why do FX traders care about the equity markets? Because it gives us a gauge on risk, okay? If the equity market is falling, generally speaking, that's a risk-off tone. If the equity market is rising, generally speaking, that's a risk-on tone. So that's where we look at the equity markets. And this is the relationships you get when you've got stocks rising, commodities rising. So when you've got, the S&P 500 rising, the Dow rising, oil rising, you've got bond prices falling, bond yields rising, you're in a risk-on environment. That means that traders are more likely to take on risk, and the higher beta currencies tend to do better, the Australian dollar, New Zealand dollar, okay? And then the Swiss franc and the Japanese yen tends to be sold off. When you've got stocks falling, commodities falling, bond prices rising and bond yields falling, when you're in this environment, you're in risk off. And that's when you get Swiss franc and Japanese yen strength, and you get Australian dollar and New Zealand dollar weakness, okay? So coming to my desk, this is what I saw as I came to my desk this morning. We were on a risk-on market, okay? You see, we had the New Zealand dollar, the Australian dollar. So look here, the equity markets were up. Yeah, they were up. Nikkei, nearly a full percent. Hang Seng, 0.5%, just over. Shanghai, just under 0.5%, roughly speaking. And so, okay, I'm in a risk-on market. And this was the strength of the various currencies against the US dollar. New Zealand dollar, Australian dollar was strong. And we had the British pound, Japanese yen, Swiss franc as the weakest. Okay, pound was being sold for different reasons. But you can see this is what you'd expect, okay? Risk-on environment, New Zealand dollar, Australian dollar strength, Swiss franc, Japanese yen weakness. So that's all pretty textbook. So going to your desk, you're thinking, well, what market am I in? Well, I'm in a risk-on market. This was the start. And we're going to see a change. I'm going to go through this change because sometimes it's helpful to see that change and to see how you play that out in real time, okay? So I was looking at this, and as I was okay, we'll just skip that for now. Okay, I think some of you guys have gone through this before, so I'll leave this equity market stuff. We'll just go. So this was the optimism that was in the market. There was optimism on US-China trade talks. That is what has prompted the risk-on tone. Okay, so that was the reason for the risk-on tone. Basically, China seemed to be ready to do a deal. They had said the change in their laws is not on the table and never will be, but Trump had sort of said, okay, if anything bad happens to Hong Kong, it will be bad for the US-China trade talks. The Chinese delegation is due October 10th and 11th in Washington, and the US Commerce had blacklisted 28 Chinese firms. So there was a mix. Looking back in hindsight is interesting. There was a mix of news, but what the market focused in on was this. China is ready to do a deal. Okay, the news broke at the in the American session, last American session yesterday, and dollar yen spiked up on the news. Okay, and so that optimism was still in the market. There's still some, the market's looking great. US-China trade deal, risk is going to be on. Equity markets are gaining in value. So at the start of the session, you looking at which trade to look at. I was looking, well, which currency is weak? Well, the pound was weak, and the reason the pound was weak is because there was pessimism about a Brexit deal going through. Even very early this morning, there was talk that actually Britain's running out of time. The EU leaders aren't very happy about the deal that Boris Johnson has submitted to them. So we had a weak pound and we had a strong Australian dollar. So that was that was the best opportunity that I saw this morning. Okay, pound Australian dollar. So that's what I flagged on the Telegram channel for HYCM. That was the currency pair that I looked at, and so I was expecting pound Australian dollar sellers on pullback. So we'll just have a quick look at the pound Australian dollar pair, and there we go. And we can see that, what time is that? So that, yeah, it was around this time here, 6 a.m. Prices moved down, and I was looking for a bit of a deeper pullback up here to get short on that pair. Okay. Now, this trade changed for me midway through the session. Although that's still a valid pair, a better pair suddenly became valid during the session, and I'll show you what news it was. It was this news. Because remember, we were on risk on, okay? So we're seeing equity markets rise, and then all of a sudden, risk sentiment was hit mid-European session when the Chinese Commerce Ministry said they were set to retaliate after the US named 28 Chinese companies to blacklist. And they said, watch this space, stay tuned, we're going to retaliate. So all of a sudden, China, from being sort of quite positive about trade talks, has suddenly become a lot less positive. Okay, so this hit risk sentiment straight away, and then I knew that the pair I wanted to trade there was no longer. I was no longer expecting a strong Australian dollar. I was now expecting a weak Australian dollar, because the Australian dollar is often traded as a proxy for the yuan. So when there's good trade news between US and China, that's good for the Australian dollar. When there's bad trade news, that's bad for the Australian dollar. So that's essentially what happened. The news came out, and I realized straight away, and I was covering for forexlive.com at the time, and this told me, aha, I'm expecting to get some Japanese strength now, and I'm expecting the Australian dollar to weaken. And that was very early in the European session. And we'll just go to the 15-minute chart. Yeah, and it was somewhere around, it was up here, okay, where we got that news breaking. And yeah, somewhere around here, I think it was, which by the time I got the news just as it was breaking, very quickly, before hardly anyone else. It was a South China Morning Post article, and it was obvious that risk sentiment was going to be hit. Now, in this trade, if you were taking this trade, where would be an obvious target? Where would be an obvious target in this trade if you were taking it? So you entered up here. Where would you be looking at taking profit? The obvious target. Give folks a chance. Technically speaking, where would be an obvious place to take profit? If you were short from the European session this AM, where would you obviously take profit? Give folks a second on the questions. See if you want to answer the question. Well, the obvious place to take profit, you see, this was sort of, news that was quite important. It was going to break, and there was another bit of news that was with the catalyst, which was simply that the talks were going to be cut short a day, and the premier Louis He's premiership. He was given a different title for the trip. He wasn't seen as having as much authority from the Chinese premier. So it was all very negative news. And so the obvious target was like these recent lows and the big round number at 72. Okay, always pay attention to big round numbers. Whenever you get like a 00 number or a 50 number, the market often respects those numbers very, very highly, okay? So whenever you get them, you really want to pay attention to them. So you see, that was the obvious place. It's these recent lows. If you're going down from there, the 72 handle was the obvious place to take profit. And this was my trade here. So this is how I entered it. Yeah, so I've just entered here about 72.25-ish, and I've taken profit just above the 72 handle. So around 25, 26 points on a very short, quick trade down. Okay, now this, my stop just above these highs here. So you can have quite a tight stop because the news was so, it just became obvious that this was going to be an obvious risk. Off move. So you're going to see Australian dollar, Japanese yen, but weakness. Just playing it down to those recent lows, the 72 handle. You're not trying to go for hundreds of pips. This is a slight, it's a slight sentiment shift, but it's enough. And it's enough to show, look, there was virtually no drawdown in that trade. I can't remember where I got into it. in relation to these 15-minute candles. But even if I got into it on this candle, there was only like, 5 or 4 points of drawdown. And that's the sort of trades you want. You want trades with as little drawdown as possible. You just want, they're just going in your direction. And there was just a one-way trip down to the target at 72.0. But the learning point here is, look, this was the first mood that we saw in the market: weak pound, strong Australian dollar. Now, like had you stuck with that trade, it still would have been a profitable trade. And because we knew there was pound weakness, so we had some Australian dollar weakness, and we had a retrace up into this level. But because we had two currency pairs that were opposite to each other, and the pound weakness was able to overcome any potential Australian dollar weakness. Okay, so the pound was weaker than the Australian dollar, so that trade moved into a direction. And say you'd entered here at this, up to this test at the 1.200 level, somewhere like that, you would have made a move down. You could have made it all the way down to the 1.8100 level, just about. Yeah, you see, you got a good profit. So I'm not saying that my first trade idea was terrible. I'm just saying that a better trade idea emerged as the session was going on. And you can see, look, hang on, with the Chinese Commerce Ministry having those comments, you can see, okay, the risk on tone changed to risk off tone. And that's one of the key, things you have to get, is that once you do your analysis, you have to remember it can change. It's a strange thing. It's a strange psychology thing. But once you've done your analysis, it's easy to get sort of focused on the market going one way. All you can see is risk on, and then you kind of ignore any news that could be risk off. So every time you're sort of analyzing a pair, you've always got to think to yourself, well, what would change this outlook? When I'm writing the Telegram channels, for HYCM, whenever I write the Telegram channels information, I always put a little phrase at the end: risks to this outlook. And that's just, the habit that I've got into, and to demonstrate to you guys is, what are the risks to your outlook? Always look at it, because every outlook has risks. There's no point pretending that, just because, I've made this decision, therefore, if the decision is wrong, then I'm a bad trader. That's the sort of way of thinking that some people get into. Actually say, no, this is my analysis, and the analysis is good, but what will change the situation? Well, if something changes, then you change. There's no point waiting for your stop loss to be hit if you see that the market conditions have fundamentally changed. You say, oh, okay, my trade setup is no longer a good trade setup. I now want to move. Now, just as I'll ask that question in a bit. Okay, so then we're getting into the European session. And then we had some news breaking out of Britain with the UK PM Johnson. He spoke to Angela Merkel this morning, and the number 10 source said that there could be only a deal if Northern Ireland stays in the custom union. If not, the deal is overwhelmingly unlikely. The Brexit talks will seem to be close to breaking down, and number 10 describes EU positions that a deal is essentially impossible, not just now, but ever. Okay? So in other words, the UK government has essentially said that the EU has made such a difficult job of this that I don't think we can ever get a deal. Obviously, that's very negative news for the pound. Okay, and then we had a whole flurry of headlines. So then we had Angela Merkel, a spokeswoman or man for Angela Merkel saying, well, Angela Merkel's, we're not going to talk about the nature of the conversation that Merkel had with Boris Johnson because it was private. Then we had the president of the EU, Tusk, saying, okay, what do you want, Britain? You don't want a deal. You don't want an extension. You don't want to revoke it. Where are you going? Quo vadis. What are you doing? The future of Europe and the UK at stake, as well as the security and interest of our people. So, like, intense frustration as Brexit talks appeared to have virtually broken down. Now, they haven't broken down, but they've virtually broken down. So if you've got those headlines, and again, I tell you that you can go to forexlive.com and get breaking headline news, okay, or get a paid squawk service, get a RAN squawk service. I'll just put one in. I'll put it into the question panel. If someone asks a question in a bit, I'll just type a send to all answer, and I'll show the RAN squawk. I'll just put it up here for you. RAN squawk. This is that's a paid service, paid news service. forexlive.com. I've been covering that for the last couple of weeks. I've been covering the European session. That's free news service. And look, this the back end of forexlive.com is a Reuters and a Bloomberg terminal, and I've got a RAN squawk service as well. So, you know, when I'm covering the European session, I've got access to all the news wires, you know, all the major ones. Anyway, Bloomberg's like $2,000 a month. That's about $36,000. You know, you gotta get a 3-year contract to get a Bloomberg terminal. It's $2,000 a month roughly. So, you know, you're getting access to fantastic news just there, and you're just going to get a fraction of a delay, but certainly enough to, you know, to understand why the market's moving. And a RAN squawk for about sort of 30 or 50 pounds, you can get a basic RAN squawk service, which will tell you what's going on in the news. And you'll see, you know, if you use that service, you can get a 2-week free service from them. And yeah, and you know, maybe we'll look at doing a discount, getting some kind of relationship between HYCM and RAN squawk and getting some kind of discount for you guys. But you know, this is you'll find this very helpful when you're getting decent news. But don't forget, we've covered before what to do if you miss the news, and we'll cover that today as well. You know, what can you do if you miss breaking news, and we will cover that in today's session. So, okay, you can just see, you know, things are breaking down. So what would you expect the next move to be? Okay, what would you expect the mid-session, if news comes out like that for EU and UK on Brexit? What would you expect the pound to do? There was someone asked in the question panel. I haven't had anyone ask a question yet. Someone tell me in the panel. What would you expect the pound to do? You got this kind of news mid-session, you know. Johnson spoken to Merkel. Yeah, Kerry, exactly. You'd expect the pound to fall, okay? And which currency would you want? Yeah, thank you, Selva. You expect the pound to fall. Great, guys. Thank you for the interaction. That's super. Now, what currency would you want to pair it with? So pound would be your weak currency. What? Okay, yes, Selva, you could pair it with the US dollar. Absolutely. I wouldn't have a problem with that. And I wouldn't have a problem with the euro either. That's absolutely fine. And my preference would be the yen. Okay. Now, my reason the preference is the yen, excellent, Kerrick, is because of this. What other news have we got breaking? We've got the US-China news that is breaking down. So we've got two big risks in the market. And that is really going to be supportive for yen. So even if the Brexit scenario gets sorted, you know that yen is still going to be bid on the US-China trade talks. So the benefit of the yen is it's being bid from two different angles. It's being bid on Brexit concerns, and it's being bought on US-China concerns. So pound yen. So looking at the US session, you know, the pound yen, that's the star performer, and I hope you guys can see that when you choose your currency pairs like this, that you understand which direction the currency is going to be going in, and you understand why they're going in that direction and why they'll continue to keep going in that direction, and you'll also understand what will stop them moving in that direction. So if we're doing this, we're thinking to ourselves, okay, I'm expecting to have a very strong yen and a very strong pound. Risks to this outlook, okay? You tell me, if we're risks to this outlook, what would change this? Write it down in the question panel, guys. Particularly thanks to Kerrick and Selva and I. Oh, yeah, I think you get a recording, So that's fine. You get a recording of this. So if we were saying, what are the risks to this outlook? What risks would there be? What would make this outlook invalid? Exactly, Sammy. Exactly. If President Tusk suddenly said, I've spoken to Johnson on the phone and we're confident we can get a deal, then what's the pound going to do? The pound is going to become very strong, and then you can go the other direction. Okay, so the risks to this outlook would be any positive Brexit news. Okay, so any positive Brexit news would be the key risk to this trade. And that means if you were in the trade and you got some positive Brexit news, would you wait for your stop to be hit? No, you just close your trade because you go, the conditions for my trade are no longer valid. Okay, and then you apply your own technical analysis, maybe your own technical system. You can just use simple retracements, Fibonacci levels. You know, it's no problem. You don't need to make it complicated. So let's now look at pound yen. So we'll look at the pound yen pair. Here we are, and this is where we're at. So let's just zoom out a bit. See, okay, we're really going down into, into the abyss, aren't we? Look, there's a big space here we're falling into. That's lovely. Weekly chart, we see like we're falling down. Okay, that's looking like that it just looks like it wants to keep falling. Now, we're not getting into it for technical reasons, but we're looking at it here. We see, okay, lots of downside. There's the 1 hour chart. So we'll use the 1 hour chart. Well, actually, 15-minute chart I like to use for intraday trading, and there we go. Okay, so now where do we want to short this from? Now, yes, you could short it from this level, and I wouldn't be surprised if it will keep going down, but I don't recommend that because this has pretty much reached the full range for the day. Now, I won't be surprised if this keeps falling, but I haven't got the conviction to enter a short in myself. I can see a nice short setup on the weekly chart, but the risk that a Brexit deal gets done is keeping me out of it because the way I've been trading these Brexit headlines is you just take short, sharp chunks of profit when you've got them because the headlines flip it around so much, okay? You know, before you know it, within about 4 hours, you have a positive headline. So you just got to be alert to that. Now, simply put your Fibonacci retracement level from left to right, okay? And we'll start looking for levels. Okay, so we see price is finding some support here at the 130.50 level. Price is testing that 130.50 level. We can see that, look, there's support, 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 50%. So straight away, a very, very simple, very simple place to enter. We'll be entering here about in between 131.25 and 131.40. I expect sellers. There, and I expect sellers up here. See this little level? I expect maybe a little bit lower down. Yeah, there. All right, got some support, resistance, support. Yeah, that's good enough. So I'd expect sellers here, and stops above there. Okay, and profit taking, I expect profit taking back down at these lows. So price returns back up to here. The obvious place you expect profit taking is back down at these lows, you know, just above the 130.50 level, you know, 130.60, 130.55, something like that. Okay, so that's, you know, what I am looking at now. I'm looking for a retracement back up to this level. And if I get a retracement back up to that level, depending on market conditions, then I'm a very interested seller from there and interested in selling back down to these lows here. So that's, you know, it doesn't need to be more complicated than that. You can see, look, there's a recent support level. You can see, so it's a bit messy, but you can see there, look, support on the higher time frame. So you just really, you know, Technically, it's a very nice place to short from. You'd expect to find sellers there. And as long as this risk sentiment remains the same, then any return up to here, you'd expect to find sellers on that first test in this region here. Okay. Now, here's a okay. Okay, so where's your order, Kerrick? At the 0.5 level, the pound yen. Where's the point? What level's that, Kerrick? So Kerrick is got he's got an order to go short pound yen. Just waiting to see if he's telling me. I'll wait for to see if Kerrick replies. Just we're waiting for that. Waiting for that. Here's a question for you. Oh yeah, 13128. Yeah, that's right. You know, spot on. You know, I think that's an excellent place to look for shorts. Okay, and the dollar yen again. You could trade the dollar yen as well on this. Pound yen, dollar yen. I have no problem with either of those pairs being traded. Yeah, pound. Yeah, I got it, Kerrick. Yeah, excellent. Now, which other commodities would we expect to be affected by this risk sentiment? Here's another question for you. What else would be expected? You know, there's some commodities we'd expect to be affected. What would we expect? Yeah, oil and gold, that's bang on the money, Kerrick. We'd expect oil to be pressured, so we expect oil to be selling off. Let's have a look at it. And we do, you see. We see oil is selling off. Look, we're at that 52 handle. 1, 2, 3 major tests. Oil's been selling off on the bad US data, concerns over global growth. When the world's doing badly, the world needs less oil. So oil loses value. That's the very simple version. That's why commodities are hit when equities are hit and risk is hit. Okay, so that's, you know, you'd be saying to yourself, well, okay, these are interesting. I want to look at these lows here. You know, looking at potential retest and maybe a break 50. So a break of 50.50 could look like more downside. Gold has a lot of value as a precious metal. When times are hard, people invest in gold. They're looking for value, so you typically see gold rise, and that's what we're seeing now. Now, I was long gold. I was long gold from this candle. Well, it wasn't that candle. I just remember this. I was long gold from this candle here when we got the very weak US. It was the US, my memory, non-manufacturing. It was the US ISM manufacturing data, which was like the lowest in like since 2009. I just knew that was disastrous for the dollar. And I was long gold all the way up to the non-farm payrolls. I was long through here, and then it was around this level after the non-farm payrolls where I got out. Okay, so now I've got back into gold longs because gold longs make sense again to me. We are seeing risk around the world, and I personally added some silver positions this morning as well. Okay, oh, and that's good. That's really rocketed up since this morning as well. This was like, technically this was so nice for me. You could just see that it was, you know, price was building, and I entered right somewhere around here, 1750-ish, I think. I can't remember now, but I got on it early this morning, and you can just see, look, you know, with so much risk in the world, you know, where do you put your money for it to be safe? You know, gold all of a sudden and silver all of a sudden has an attraction again. So I'm expecting gold and silver bids and downside in oil. And then we had like PPI, US PPI data out, and that's like the lowest in 3 years as well. Like inflation pressures are really low. We've got inflationary data out tomorrow at the US. And will, so you put it all together, you can, this is not a surprise. Yeah, that's right. Yeah, I mean, the reason I wouldn't be trading CAD, you're right. If we're seeing a drop in oil, we should see a drop in CAD. That's right. It's just the reason we're seeing the drop in oil is because there's bigger fish out there. Okay, there's more risk, so we're going to see yen strength, Swiss franc strength, gold strength, silver strength. That's making more sense in the current environment. All of a sudden, Brexit risk, US-China risk. Your go-to isn't CAD. Your go-to is your yen, your Swiss franc, oil, gold, silver. Okay, that's just. But you are right. You are right because of CAD's correlation with oil. Okay. Okay, that's good. That was a nice surprise for me to see silver pushing up as well. Okay, so we've done that. Sentiment for the US session, weak pound, strong yen. Then we're looking forward. So let's have a quick look forward where we've got. So looking at Forex Factory. There we go. Okay, so looking forward, just seeing what events we got. We got Fed speaking tomorrow. We've got that very weak PPI data out for the US dollar. We got some strong Canadian building permits, but I think I just quickly saw the headline before it went on. It's maybe like one-off events that have boosted that. But that's poor for US. That's why we're seeing more gold and silver upticks as well, because obviously it's traded against the US dollar, and this is putting a bearish outlook for the US dollar. Will we see rate cuts? Will we see one rate cut at the end of this month? Then, well, the market will start pricing it more likely than not. Obviously, the Thursday big data to look at is the CPI data for the US dollar. Okay, so that's some of the key things. Okay, manufacturing production. Okay, it's all things Brexit for the pound. Obviously, Bank of England Governor Carney speaking, and the Canadian employment change unemployment rate. That's going to be interesting for the CAD as traders are trying to work out what's going on with the Bank of Canada at the moment. But Fed chair speaking tomorrow and tonight, so that's market moving potentially. That's market moving, and what we're looking for here is we're looking for any dovish turns. So if you start getting like Jerome Powell saying things like, yeah, maybe we could see a case for a sooner rate cut than we anticipated, or something like that, you're going to see gold and silver spike up, and you'll see the US dollar, you'll see the dollar index fall. Dollar index is currently flat, about 90, just under the 99 handle. It's just up 0.02%. So there's some of the key things that we're looking at. Always have a sense of what's coming, where you're going, especially these Fed speakers, and the Bank of England speakers and the board member speakers. Who's speaking? Who are they? Are they a dove or are they a hawk? And you want to look for, for them to say something that's opposite. So if you've got a hawkish board member, if they say something dovish, it has more impact than if you get a hawkish board member who says something hawkish. Well, that's what we're expected to say. They're a hawk. What's traded is when like a dovish or a hawkish board member says the opposite of what they are. So, if a dovish board member suddenly says something hawkish, then the market pays attention because a dove's turned into a hawk. It's a shift. And we're always looking for that shift in sentiment. Okay. Now we'll have a quick look at what's driving currencies at the moment. Now, this is the idea of this is so we just start to really learn to hone in on what's moving the market and why. Okay, some of you guys have been following me for a while, so you know by now, and you can see how the fundamentals move the market. Some of you are at the stage now where you'd be like, I can't believe I ever traded financial markets without studying the fundamentals, and it just, how did I ever do, why did I ever think about it? And so one of the key things to really hone in on and zone in on is what is going to drive, what's driving each currency at each particular time. When you kind of know that story, you can recognize that shift. Okay, so we're just going to go through some of the currencies now and look at the shift. So okay, let's look at the Australian dollar. So the Australian dollar is being moved on global trade tensions. Okay, the Australian dollar is being moved on the US-China trade talks. If talks are looking good, then that's good news for the Australian dollar. If US-China trade talks are going bad, that's bad news for the Australian dollar. So straight away, you've got that in your head, and that was a trade I took today. Okay, very simply, the trade talks were breaking down, so I knew that was bad for the Australian dollar, good for the yen. So Australian dollar, Japanese yen short, bang, quick profit. That's 15-minute chart, so that's 15, 30, 45, 1 hour, 1 hour, 15 minutes, 1 hour, 1.5 hours, you've made your profit, bang, you're out. Okay, so when market is risk off, that's when you get the Australian dollar selling off. When market is risk on, that's when you see Australian dollar on. Okay, now the Reserve Bank of Australia bank policy is also still a factor to watch. Okay, so if you get a tone from the Reserve Bank, a tone shift from the Reserve Bank of Australia, either more dovish or hawkish, or a clear trend in the economic data that's either much more negative or more positive, then that moves the Australian dollar as well. Okay, but the next big shift that's going to move the Australian dollar is most likely to be some change or development in the US-China trade talk. So if all of a sudden Donald Trump tweets and says, oh, Xi Jinping, my great friend, and I are going to do a fantastic deal, and we're going to end these tariffs, and we're going to strike the deal of the century. We've been talking together, and it's all changed. Then the Australian dollar is going to rocket. Okay, and if President Trump tweets and says, well, you think you've seen tariffs before, you wait, I'm going to tariff 30, 40, 50% until China's on its knees, then we're going to see the Australian dollar plummet. Okay, so what we're looking for the Australian dollar, what traders are looking for, is that shift in sentiment. Right? Get that shift in sentiment and move. And you're always looking for a shift. So at the moment, sentiment is very negative. We're risk off. We're concerned. We're worried about US-China trade talks. So if something positive comes now, it's going to have more impact. Okay. Now let's look at the Canadian dollar. Now the Canadian dollar. This is interesting because with the Canadian dollar, the market is trying to work out what the Bank of Canada is going to do next. The Bank of Canada is the only major bank to shy away from using dovish language or actions. Okay, they're the only major bank. They weren't dovish in their last rate statement. And so the market has been keep thinking, well, when's the Bank of Canada going to turn dovish? We're expecting it to turn dovish. But the data's been positive, and recent figures have been a little bit more negative. There was GDP that came in flat, and then last week's PMI showed signs of weakening. But the market is still kind of reluctant to make its mind up one way or the other. So that means if we get a clear indication one way or the other, we're going to see a move in CAD. And obviously, as Kerrick and Sammy rightly pointed out, CAD will also be affected by oil prices. So what's driving CAD? Oil prices. And then it's kind of neutral from bank policy, but a big shift from the Bank of Canada will move it. So say, for example, say they cut rates or they have some dovish rhetoric, then that'll be enough. And we'll see the Canadian dollar move, and it will move for, good sort of probably 24 hours after that move. So that's something that can be joined on a pullback. Okay, that's what traders will be looking for. So keep a close eye on the CAD for any shift. We're kind of neutral. Market's trying to make its mind up about it. Swiss franc. Now, Swiss franc is essentially a pure safe haven currency. If the market's risk off, you're going to see the Swiss franc rally. If the market is risk on, then you're going to see the Swiss franc sell off. Now, the only outlier to this is that the Swiss National Bank can intervene in selling the currency to stop it appreciating too much. But okay, they did their really big intervention January 2015 when it fell. Well, they removed their intervention rather, and it fell, thousands of pips. So you just got to watch out for the SNB intervention and how they play it, because they've really messed around with that currency in the past. So you've got to be aware of that. But they don't like the Swiss franc getting too strong. So this is the problem. When the Swiss franc gets too strong, it hurts the Swiss export market, because a lot of the Swiss economy is export driven. So obviously, if you're exporting your products around the country, around the world, and your currency is really strong, it makes it more expensive. It's harder to face competitors. So it's bad news for the Swiss. Okay, so that's why they want to weaken it. That's why they don't like a strong Swiss franc. So they're the things to be aware of. Okay, and also because of the historical relationship with the SNB and the Swiss franc, most traders prefer trading the yen in risk-off tones than the Swiss franc. So I'd say the Japanese yen is more popular. Also, you don't want it. You just don't want it in your mind, do you? That maybe the Swiss are going to do something crazy with the franc. You think, oh, forget it. I've got a choice of the yen or the Swiss franc. Well, I'll just trade the yen. So the biggest driver here for the Swiss franc is going to be the US-China trade war. Okay. If a deal's being done, you see the Swiss franc sell off. If a deal's not being done, you see the Swiss franc rallying. Okay. Again, this could be hit by all sorts of risk. So if there's anything on the Iran situation, I think that North Korea, any increasing tensions in Hong Kong, Brexit, US-China trade issues, they're all going to affect the Swiss franc. Okay, let's move to the next currency to look at. We will look at the euro. Now, the euro is, it's an interesting place. The ECB kind of failed to really shock markets with their last policy move. Yes, they cut rates 10 basis points. Yes, they announced a sort of quantitative easing program that's meant to go on, in theory, forever. But the initial rally from that faded quite quickly, and the data out of the Eurozone has been quite negative. Now, we had a little uptick today in German manufacturing production, but the old saying, one swallow doesn't make a summer. So the outlook for the EU is difficult. will be hit by a hard Brexit. EU is being hit by a slowdown in global growth, the slowdown out of China, slowdown out of US, obviously impacted Europe. So, what's going to change the euro? Only kind of an extended period of good data, right? That's the only thing that's going to really help the euro. If there's something really negative, even more negative, that could hurt the euro as well. So if the ECB could, one thing that could be, if the ECB step in and they say we're going to do more, we're going to cut rates even further. But what they've actually been saying is about the need for fiscal policy. So monetary policy is a policy that a bank does. Fiscal policy is a policy that a government does. And the ECB, as Draghi was sort of bowing out, he was sort of saying, look, we've moved from monetary policy. We've done as much as we can. We now need fiscal policy. So the other thing to look out for is look for a fiscal policy. Okay, Europe. How could Euro be affected by an Iranian nuke deal? You might. In short, I'm not sure how the euro will be affected by an Iranian nuke deal. I'm not convinced. I think the euro can work as a funding currency. So against some pairs, you might see it appreciate. But then I'm thinking if there was, yeah, okay, if it's an Iranian nuke deal, that's basically risk on. So you'd see the euro, you'd probably see the euro rise. Okay, so I expect the euro to rise on an Iranian nuke deal. That's what I'd expect. But I wouldn't have a lot of conviction with that eye. I certainly wouldn't be jumping in with a long euro US dollar if I heard the announcement of an Iranian nuke deal. Dollar yen would probably be my currency of choice on that. Okay, what's driving currencies at the moment? Pounds. Well, we all know the answer to this. Pound, pound, pound. It's Brexit. Okay, will the UK leave the EU with a deal or without a deal? Anything that makes it seem like a deal is going to be done is going to be pound positive. Anything that makes it seem a deal is not going to be done is pound negative. That's the very simple equation you need to have in your mind. Now, there are nuances to that. So if Boris Johnson has to ask the EU for an extension, that will be pound positive in the short term. So say Boris Johnson said we want an extension until January so that we can have a general election. That's the path that's expected now for the pound, okay? That's part of the reason why I'm not just jumping into pound shorts, that I'm going to hold for days and weeks. Because there's so many unknowns, and the most likely thing is Boris Johnson has to, according to the Ben bill, he has to ask the EU for an extension if he hasn't got a deal with the EU by about the 17th or 18th of October. Okay. Now, will he do that or not? It seems like he will. So if he's forced to ask for an extension, he will. That's my understanding, but I wouldn't be surprised if he tried to wriggle out of it. But I think he's got to ask for an extension. So when he asks for an extension, the extension will be so that the UK can have an election, and then the election will functionally become a second referendum on Brexit. All right? So there's lots of zigzags ahead for the pound. You can see ups and downs, right? Oh, yeah, okay. Just a good question from Kerrick. How long should we give the current retracement trace to activate if there actually isn't any market shifting news from what happened in the London session? I would give it 24 hours. So I give it until this time tomorrow, as long as there's been no shift in sentiment, right? About 24 hours, and then forget it. The market is very short-sighted, has a very short memory. Quickly sentiment shifts and fades, so about 24 hours. So but returning to the pound, that's the next part. Extension will be pound positive. Election will be pound negative, because if the Tories are ahead in the polls at the moment, and the Tories are set to take Britain out of Europe, okay, even if they don't get a deal, so then that will be pound negative. But then say in the polls, the Lib Dems or Labour are ahead, who are much more likely for us to remain. In fact, the Lib Democrats have got as their campaign agenda remain, okay, then that would be pounds positive again. So there's a number of different outcomes here, although as I'm looking at it, it looks almost certain that Britain is going to head out of the EU, but you can't guarantee that. So it's like with trading, you can never guarantee any outcome, which is why you always have to carefully manage your risk. Because even when you think things seem like a dead cert, they're not. Pound yen, again, it's a safe haven play. Like, for me, this is my go-to safe haven currency. So I prefer the yen over the Swiss franc. I think you get some bigger moves with the yen than you do with the Swiss franc. Whether that's statistically true or not, I'm not sure. But that's my take on it, and I prefer the yen. And if I can stay out of the Swiss franc, then I'm ultimately happier because of the way the SNB have intervened with it before. There's been some massive moves in the Swiss franc, and the less exposure I have to that, the better. So that's the yen. again, it's virtually the same as a Swiss franc. It's the only thing with the Japanese yen is there is a Bank of Japan policy issue at the moment, which is will the Bank of Japan announce more quantitative easing? Whenever a country announces quantitative easing, that's risk. That's not sorry. Whenever a country announces quantitative easing, that weakens the currency. Okay. So if the Bank of Japan announce a brand new quantitative easing program that surprises the market, you'll see the US dollar Japanese yen pair rally. You'll see dollar yen rise. Okay. So that's just to be aware of the yen. And there's chatter. There's chatter that the Bank of Japan has to do something. So just to be aware of that. Follow that story. New Zealand dollar, finally, I think. No, we've got US dollar finally. New Zealand dollar, again, okay, they've been quite bearish, but the governor always been saying, okay, we're happy with the surprise rate cuts we've done. The thing to look for here on the New Zealand dollar is if you get more negative data prints. Anything further negative, comments or data prints will make the New Zealand dollar fall further. Okay, for anything positive, New Zealand dollar, we need some good data or some really unexpectedly hawkish comments from the bank. And quite a good pair to trade the New Zealand dollar with is the Australian dollar New Zealand dollar pair. That can be quite a good pair because they're both commodity currencies. They're less, they kind of move a little bit more together with risk on and risk off. So that's just a helpful little tip to be aware of. Although the Australian dollar tends to respond more than the New Zealand dollar because of the Australia's close connection with China. So just to be aware of that. Finally, last but not least, we have the US dollar. The US dollar has been sold off recently, and its dollar index is flat today. So the weakness we've seen in the US dollar all came from the weak PMI data we got out of the US last week. We had a weak manufacturing, weak services PMI. The manufacturing was like the weakest in about 10, 11 years. The services PMI was like the weakest in about 3 or 4 years. And then the non-farm payroll was a miss on the headline, but the unemployment rate was like the best in 50 years. So that was the NFP really wasn't great, but it wasn't terrible. And that's all the market needed just to, keep its head above water. Now, we've got a new week, got PPI data out. That's been a miss, something like the lowest in about 3 years. So that's going to hit the US dollar today. And we've also got the CPI data out on Thursday. So the odds of a Fed rate cut, are 60, 70, 80%. Okay, so the Fed is kind of being expected by the market to cut rates at the end of this month, October the 31st. So if you get a further deterioration, that could all but confirm a cut at the end of the month. Okay. If we get any fresh comments from the Fed that talk about weak data, any fresh comments that, like, if you're getting hawkish board members talking dovish comments, that will be negative for the US dollar. Any signal that the Fed are not planning any rate cuts will be positive. So if, Jerome Powell says, we can accommodate more weakness, we won't be cutting rates or something like that, then you're going to see the US dollar rally. Okay, so economic data is vital here. The producer price index, PPI data, weak inflation will be enough for the Fed to say we decided to cut interest rates. Okay, so be aware of that. It is enough. So if you get a weak CPI data, we've had weak PPI data, manufacturers, producers, they're not wanting to pass on price rises to their customers, okay, obviously, so this is affecting inflation. And if inflation is still subdued, which may well be, then we could see some more US dollar weakness. So just to be aware of that. Now, thankfully, we've been able to cover what's driving all those currencies. And I'm really glad we had a lot to get through today. And I'm glad we got through it. I hope that's been helpful for you. I hope that's giving you an indication of what's driving these currencies. Focus in on the key sentiment shift. We've got one to look at today we've got the pound yen, which is a great pair to be looking at. So we can see we've got this shift in sentiment, risk off, Brexit bad news, shift. Okay, so that kind of entry here or here is valid for the next 24 hours or until there's another risk, a sentiment shift. Okay, so after about 24 hours, I wouldn't be interested in the short anymore. The market goes on to something new. Okay, but the next 24 hours, I'd expect sellers here, here, and profit taking back down here. All right. So find the shoulder, wherever the shoulder is in this bottom. So look, find it, somewhere around here, shoulders, right? So 130.70, that would be ideal. Okay. So 25. So here, so there's that 40 odd points from there to there. Okay, that's what I'll be looking at for the next 24 hours. Now, obviously, if sentiment shifts and changes, then that's no longer valid. If Boris Johnson and Michel Barnier and EU's Tusk suddenly say we're going to get a deal, then the pound's going to rally, and then you're looking at buying the pound. Now, if you were right here as the news was coming out, you could have sold it down. Okay, that's your kind of phase one. But say you've come to the market and you say, oh, well, I missed that. Well, you guys know I took the Australian dollar Japanese yen pair. I didn't take this pair. Okay, so I've missed this, as it were. But that doesn't mean you can't get in. Just don't jump straight in, because if you jump straight in here, yeah, price might carry on going down, but it might meander its way back up here, and then you're back up here, say, in 36 hours time, and then a new sentiment driver comes in, and you're under a lot of water. So instead, wait for your retracements. Next 24 hours, I'd expect that to find sellers there. I'd expect stops just above that high there, or this high here. So somewhere around above that 200 exponential moving average. That would be a pretty sensible place to have your stop. But maybe just above the 50 level. So 13261, just above that swing high there. Let's have a look on the 15-minute chart. Yeah. Anywhere kind of above there is going to be okay. Okay. Maybe just the best place for your stop is just above that swing point there, because then you got 1, 2, 3, you got 3 swing points that you're behind. That's where I expect to find stops. Okay, guys, it's been great having you for this time. Don't forget the offer that HYCM do as well. So I'll show you this offer. This is the coaching page. I'll just send it out to you all. I haven't got much time, but if you want one-on-one coaching, there is an offer that HYCM do. It's a pretty good offer, really. So feel free to take that up, have a read through the information. I've gone through it quite a few times, so I won't go through it again now. Okay, guys, take care of yourselves. I hope to see you next Monday for the FX week ahead. Trade safe and have a good one. Take care now, guys. Goodbye.